Okay guys, Sunday the 8th of October and we're on the FTSE 100. So let's have a quick recap of this market from last week in relation to our Sunday analysis, and then we'll have a look at the market for the trading week ahead. Now, I'm not actually in the UK until tomorrow morning, so hopefully this gets loaded up. I'm not sure when it's going to get loaded up. If it is a bit late, it's just purely because the internet connection here is not as fast as back home. So what I'm looking for, what we were looking for last week. Last week we went over this key level back here of resistance. So right here, down toward these levels right here. What we went over was we could look for potential sell positions at this area. And then we went over how if we broke up above this level, I think it was actually just a little bit higher. I think it was up at 7,450 on that video. We went over if we broke up above these levels, we could then expect a potential move up into at least 7,500. Now, the reason for this, the reason for looking at this as potential resistance, we ignored this candle because what I went over was this looked like more of a false break. The market had been rejecting at these levels, then we got this false break up, and then we had the sell-off. So for me, the key resistance levels were just down below where the market had been rejecting multiple times. Now, the only thing I really looked at last week, I mean, it's been a very, very strong rally on the FTSE 100. It is difficult to see rallies like this coming. It's difficult to see things like this coming. It's difficult to see things like this coming. Certainly, this was back in December after Trump got elected, and it just kept going and going and going and going all the way up into 7,360. The main thing is when you see trending price action in a market, you have to be willing to just get out of the way. So if you're looking for sell positions up here, and they're not setting up properly, you're seeing support against them, just come out of the trades. One of the worst things that I see with beginners is that they trade against the market and they just keep doing it and doing it and doing it and doing it. So you'll have a very strong move down like this. Maybe they'll try and buy here, they get their first loss. Then they'll try and buy down here, they get their second loss. Starting to get really frustrated, they buy down here, they get another loss. And then we close very strongly down here like this, and they start saying something like, okay, MA200, it's sold off a huge amount. I've taken lots and lots of losses. It's absolutely guaranteed to reverse now. I need to get another buy position. They take another buy position here. They lose. The market just comes down again. They're frustrated. They've lost lots and lots of money. And then what happens is it gets all the way down here and they go, you know what? To hell with this. I'm just going to sell the market. And they try to sell, and then the market goes against them and stops them out once again. It's human psychology. It's just the way that our brains are wired up to work. It's really important that you just learn to, if the market is just giving you those very strong movements, just get out of the way. It's no problem to take buy positions on daily time frame, 5-minute time frame, day trading, when you are seeing these movements, if you see the good setups. I do. If I see perfect setups, I will take them. But what I'll also do is, if we're having very strong trending movements, I'm taking the positions. If it starts to move against me, I just get my stop to break even, or I just come out for a couple of points profit or a couple of points loss. Just looking to protect my account, because you can do real damage when you see these types of movements. Now, the only thing I looked at, other than this key level, and then other than the rally last week with subscribers, was this candle right here on Wednesday the 4th. I actually posted this up onto the Facebook and the Twitter page. I believe I called it a morning star. It's not really how I was looking at it as a morning star. I went over on those posts. I was looking at both extremes of this candle, 1 and 2, basically looking for the breakout. As we started to break up above, again, we were looking for that move to 7,500. We got that break above and the market shot up into those levels. That was on the Thursday. Okay, so coming into this week, well, at the tail end of last week, first of all, we had another bullish candle on the Friday. What was interesting on this one, though, was we opened bullish. We opened above the price extreme from Thursday. And the market just chopped around in a sideways range pretty much all day. It didn't really go anywhere after that. It was bouncing higher, then coming back down, then bouncing higher, then coming back down. And then we had non-farm payroll. And what was surprising was with non-farm payroll, the market didn't really go anywhere at all. There was barely any reaction whatsoever, which is unusual. On the FTSE, it's not quite as pronounced as, say, on the Dow Jones or on a Forex pair, but you still tend to get some sort of movement. There was basically nothing. So it could be signifying that we are coming up into stronger levels of resistance, or at least that the bulls are running out of energy temporarily, and we would then see some sort of pullback. So let's have a look at these levels. Let me just get rid of all this. So really, next key levels now are right where we're sitting. It's this whole section up here. Actually come a little bit higher. Let's just mark it in. So really we're looking toward 7530. It's actually just where the candle came up into last week. Maybe a little bit higher. 7535 to 7540, and then we're up in toward 7560. And the reason we're looking at these levels is because as the market made its very strong bullish rally previously, we did pop above these levels, but this is where we started to see the rejection. This is where the sellers started to step into the market. As we started to come back down once again on the failures up here, this is the all-time highs. The market again tried to make that bullish rally, and we failed, and we failed. And then we started rallying up again back in August. And again, we've seen those failures. So this level is, again, key resistance, worthwhile looking for. The potential rejection up here, potential bears stepping in, at least for a correction. Doesn't mean the market is just going to plummet. However, it is definitely worthwhile looking for correctionary price action up here. We've had such a sustained rally, really since we broke out of that ascending triangle we were looking at, which was down here. Up like this. We're looking at the price squeeze. Since we've broken out of those levels, we have rallied by round about 200 points. So this is key level of resistance next week. And then obviously up into the all-time highs. Around about 7580 to 7600. I think it was almost exactly 7600 we reached. 7600.1. Key resistance once again. Also worthwhile, if we break up above this level, we would then look for it acting as potential support and the move up into those all-time highs. If we start to break up above the all-time highs, likely going to be lots of stops up here. We could expect a some sort of a bullish surge up. You know, it's impossible to say by how far, but we'd expect stops to get cleared. We'd expect breakout traders to step in and this market to bounce higher. So key resistance. Also worth looking at support and support if they break. And then looking at pullback levels, we have this little pause here, giving us a clue that potentially we would find support at these levels. But for me, really key levels now on this market is if we start to get back down toward the structure down here. Let's just mark this in. So one level right here, and then one level right here. This would be the breaking up above the previous price pause, coming back down to now test it as potential support. We can actually look at this. If we take the break up out of this triangle, it would be almost exactly actually 50% Fibonacci retrace, sitting down at these 7425 levels, 61.8 down at 7400, the round number. Just another little added confluence, making this worthwhile looking for those bullish continuation movements. And really coming into next week, guys, that's the main things I'm looking at. Key resistance up above, I'd also be happy to look for support at both. If we came back down, if the very strong rally is going to continue, then good place to watch. You can actually just bring it up slightly towards 7480. However, key levels of structure down below at 7445, 7450, down toward 7400. Both lining up with Fibonacci levels, both lining up with key levels of structure after this price breakout. Support, support, resistance, resistance, also support, support. Less inclined to look for resistance at these levels if we break through, just because we've got the MA200 coming straight into these levels. and also all of this previous level of structure. I'd then start looking at smaller breaks down, smaller breaks through levels, looking for the market to almost step down toward next key levels down here. But we can have a look at that next week. It's very unlikely we're going to see the FTSE, if it does start to have a correction, come all the way back down in 1 week. Could happen. But for next week, guys, support, resistance, support. As always, I hope you found that helpful. Hope you all have a good trading week next week. I'm James Orr, and thank you.